Hello and welcome to another update video about optimism. Yeah, on the optimism chart, last video we highlighted really this ascending wedge pattern, and we highlighted that these very often break to the downside, which it did in this case. So let's focus on the bullish and the bearish scenario. First of all, my default scenario on this chart is bearish, or at least uncertain. So you can see here in yellow a projected 5-wave move to the downside. So don't think this will definitely, or it has to happen, because it doesn't. It's rather a projection, and I will tell you which levels need to break to get there. So first of all, what you need to understand, and that's why I've got it like that, is because the move to the upside here was just a 3-wave move. So you can clearly see it's not a 5-wave move. The waves 4 and 5 are missing. Now, this could have been a wave 4, but it broke. And the wave 5 never happened. So it should have been, to really give us some more long-term bullish outlook, a more bullish outlook, should have been this. Would have been great. Didn't do it. Then I would have been much more optimistic about a pullback and then further continuation. Never happened. Okay. Instead, it moved up in 3 waves. It moved down in 3 waves. It moved up in 3 waves. It could actually become a triangle, but that is too early to confirm. That's why I highlight to you, it doesn't need to go to new lows, but it could just very easily, come down in a correction, hit the trend line maybe again, right? And then do this for a little while, just sort of being stuck in sideways action. That's absolutely possible. Okay, so if we're now looking at this structure in a bit more detail, let's first of all talk about the base case, the bearish case, okay? And how this would work out in a more detailed wave count, because I've got the detailed wave count projection on the chart. Just be aware it's potentially dangerous to dive that deep into the lower degree wave count, because these can change a lot, these lower degree waves, whereas the larger degree assumption may not change at all. Lower degree waves can change frequently. So, maybe if you watch this video tomorrow, they might have already changed, while actually bigger picture wise, nothing has changed. Just be aware of that, okay? So if we dive in to the detail, you can see here, I count this as a WXY structure. So that was complete. I explained to you in the last video that we often see here breakouts to the downside of these ascending wedge patterns. It was a deeply corrective structure to the upside, and it was still in resistance, and therefore a move to the downside was preferred. Now we have seen fairly impulsive move down now. I have already, for channel members yesterday, added a sub-wave count here to the chart. Again, this is highly speculative. I've got a potential 1-2 setup, and here I would say we're probably still in the 3rd wave. So not that you get confused, it should ideally play out like this. A wave down, B wave up, and C wave down. So 3 waves down, okay. Why is that? Because in this bearish projection, we're dealing with a wave 5, which is part of a diagonal, so we're looking for an ABC structure. Again, that is subject to change. So it's a bit of a moving target, and we go with the count as long as it's valid. So here, looking at the micro count, I think we had a wave 1 down. That's pretty clear. A wave 2 up. It's also pretty clear. And you can see in the 3rd wave, there's only 3 waves so far. So another low is missing. Also, the ideal target of the 3rd wave is the 1.618 Fibonacci extension. That hasn't been reached yet. It reached only the 1.236 extension, so 148 would be ideal for the 3rd. And we should get a 4th wave and a 5th wave. This is at the moment just a projection, and I can tell you how long this wave count is valid. This is really important, because we can go with the current wave count as long as price stays below a certain level. Certainly valid as long as it stays below the wave 2 high of 173. But we can already now, with the latest structure, go with something else. We can look at, so here, can label the subwave 1, 2, 3, 4, 5. And this wave count is valid as long as this white wave 4 is not going to, or is not breaking above the 50% fib level. So $1.61 is micro resistance. Here actually you can see that 161. That's the micro resistance level for this wave 4, then one more low, and then it should go its way. What I cannot rule out is that after this first initial 5-wave move, that this is already the A wave. We will need to see, okay, but it will not have a great impact because the targets of a retracement in the B wave will be the same as for the wave 2. But this is sort of how I see it at the moment. That means, in simple words, as long as price does not break and sustain above 161, so 1.613 actually, we go with the current wave count. A move above that may force me to change the wave count on the micro level, but it will not have an impact on the idea that this could just be a larger downturn, okay? It might just work out in a different way. You always need to understand we obviously have a couple of scenarios on the larger time frame. We typically have a base case, then we work our way down and follow the micro count that will always tell us as early as possible if something has to change. But a change on the micro count does not change the big picture. It would really need to take a break above resistance here, above 189, to consider something much more bullish. Now, of course, there might be a few people who are looking for a more bullish scenario here. And yes, of course, there is one. It is just highly speculative. So I can count the move up here of the June low as a leading diagonal. So we would have a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. And we can call that a wave 1. It is just, given the chart context, not too likely, or at least not too reliable, because the move up here, which was the preceding wave of a larger degree, was just a 3-wave move. So we cannot really trust it, okay? Nevertheless, we have a potential 5-wave move up. So in any pullback now, A, B, C, and it should also in this scenario go lower, we will be able to give you support, a support zone in a wave 2. And from here, price has a chance to reverse. So anybody who's looking for a bullish setup could use that. It's just that the analysis here reveals that we need to be on the side of caution when we trade this to the long side. So, and that means price could come down into the region between $1.27 and $1.04. If we get closer, I will leave that on the chart. I will take that off now because I don't consider it a reliable setup at this stage. But you could say that for anybody who's looking for a bullish setup, key bullish support is $1.04. Below that level, the yellow wave count is pretty much confirmed. Until then, we could just be in a corrective pullback after price rallied in a leading diagonal. What you need to know about these diagonal structures, they can be counted as corrections. And due to the unclear outlook of this chart, which I explained to you why, the yellow wave count is currently preferred. But if price comes into this region, we have an attractive reward to risk ratio, and this is where it's getting potentially interesting for a long trade. It's just that probabilities wise, we cannot really trust it. I hope that makes sense. That's my update about optimism. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.